Good morning, ladies and gentlemen, and welcome to the RBG Holdings PLC interim results for the period ending 30th of June 2021 investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard and will notify you by email when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you'd give that to your kind attention, we would be most grateful. And I'd now like to hand over to Robert Parker, CFO, and Nicola Forsten, CEO from RBG Holdings. Good morning.
Thank you, Mark, and good morning, everybody, and welcome to this, our interim results presentation for 30th of June 2021. Just introducing myself for those of you that haven't met me, I am a commercial CEO who took over the commercial management of Rosenblatt in 2016, bringing it to market in May 2018. I am not a lawyer and I have only got commercial experience running Brands Hatch Group in the 90s and into 2000s and making approximately a 6 and 7 times return on money for our investors. I'm joined today by Robert, who is my group CFO and who has considerable experience in both the public and private sector and has raised an enormous amount of money. I can't actually remember the number today, but it's an enormous amount of money for investors and clients previously, and is obviously what normally I hand over to
a finance professional. I'm a chartered accountant with 30 years senior experience. I think that's enough.
Much better when you introduce yourself. So just moving on to remind everybody what we look like today, and really no change from the results, except to say that we have now transferred the trading and assets of Rosenblatt Limited into into RBG Legal Services, creating two branded legal divisions beneath that, Rosenblatt and Memory Crystal. That happened on the 1st September, and we'll talk a little bit more about that when we get into the guts of the presentation. But that business transfer has completed and sees the completion of phase 1 of the integration, coming only 3 months after the acquisition. Looking at our strategy, and as everyone knows, I like to remind ourselves of what our strategy was at the time of the IPO and how we're doing against that. We did not position ourselves as a roll-up of legal services, as a mass market player. We always positioned ourselves as a high-margin, highly commercial, mid-market professional services business that was looking to cherry-pick the best of what is available in professional services. And I think that we have proven that in the M&A that we have done to date. So we're very selective about the M&A that we do, and we want to use our expertise to move into litigation finance, taking the benefit of the returns that are available in that market, whilst recognising that that is not a quick industry, that is a slow industry, and it takes many years to see returns from investments often. And as we are witnessing with our own investments on our balance sheet under the legal services banner. How are we doing in the progress against that strategy? Well, the legal services business has already grown and diversified with the acquisition of Memory Crystal. So we've moved from 67 staff at IPO to 212 within the legal services division. That's 49 fee earners moving up to 139 fee earners. And what's really important about this is that we have finally reduced our reliance on any one income driver or any one partner, and that is the most important aspect of that acquisition. We successfully moved into litigation finance both in 2018 with a float, being able to fund on balance sheet our litigation investments from then Rosenblatt, and then in 2020 we launched Lionfish, which enabled us to invest in third-party litigation. That's client cases that are run by law firms that we do not own. And currently we're holding a conservative 7.7 million investments on our balance sheet, which Robert will cover off in more detail during his presentation. We have begun the diversification into legal services, so beyond legal services rather, and then obviously with the acquisition of Convex and the development of Lionfish, such that we now have 151 fee earners across the group, up from 67 at the time of the IPO. The primary focus for the end of this year is the integration of the acquisition of Memory Crystal, and I'll talk a little bit more about that when we get to the summary on that division. So let's now hand over to Robert, who will give you an update on the financials for the half year.
Morning, everyone. So I'll just take you through some highlights and then drive into the different key businesses as we walk through. So we're presenting, and I'm paraphrasing. So we believe these are a solid pair of pieces of results, but I also want to give a health warning. Professional services from year to year is not the same in any one month or any one half, and you'll see that through the comparison of these results. I think what we're showing here with these solid results is that we've got all divisions delivering in comparison to last year, where we had a significant downturn in the Convex business. And I'll go through, and it is the interim results, and we're going to compare half year to half year, but I always think is a good reference point. So last year in a full year, we did 25.6 million revenue and gains and delivered 6.7 million EBITDA. So the half year to date, we've done 18.3 million in revenue and 5.2 million in EBITDA. So we've made some significant progress. And also want to remind please, the analysts did upgrade our results before we did the acquisition. We focus on the full year, but as you'll see, we've got a solid set of results on our journey to delivering those forecasts. So revenue and gains are up 53% to 18.3 million. EBITDA is up 95.4% to 5.2. The really interesting part for us is that of those gains, organic business delivered 35% of that 53% increase, and 71% of the 95% EBITDA was purely from the organic business. And I think if you drive through our results, what you'll pull out is, with this year, Convex has already delivered £5 million worth of revenue in comparison to the last half year where we did 0.3. So as you see, with all the business delivering, there's a significant uplift in what we see on the half year results. We've got pre-tax profits of 3.9 million as it's driven through from the revenue, and profit after tax of 3.1 million. So I want to highlight also some of the things that are going on within the balance sheet. So as Nikki highlighted, so within our strategy, we're investing in our contingent cases. Year to date, since we floated, we've invested 6.9 million of WIP, contingent WIP. There is no recognition of this in any of our results. So there are no contingent recognition of any of our contingent businesses, no recognition of the contingency in our business. We're carrying in our balance sheet at the moment 7.7 million of fair value for the 15 litigation cases that we've invested in. And we've always emphasized this point as we've gone through most presentations. We account under IFRS 9, we fair value. We try to account to as close to those cash investments as possible. And what you will see later is that the carrying value that we have at the moment is less than those cash investments that we've made. The legal services business is up 9.7% to 12.8, and I'll break that down a little bit more. As I've said with Convex, Convex has already completed 8 deals, delivered 5 million of revenue. Last year Convex was significantly impacted by COVID, but generally what we saw before the acquisition with Convex delivered 12, 13 deals a year and roughly around 6 to 8 million pounds worth of revenue. So we see that coming back to its consistent delivery before the acquisition. Lionfish is continuing to deliver. We've sold down a percentage of our investments. We've delivered 0.8 million on that percentage. And year to date, since Lionfish was launched, we've got disposal proceeds of 3.2 million. And I do like to highlight that Lionfish was only launched in 2020. It's probably one of the few startups I've ever been involved in that's been profitable since day one, basically. We've got 9.8 million pounds worth of debt. Effectively 1.6 million net debt last year. This reflects the acquisition or the term loan that we've driven into the business in order to fund the acquisition. We renegotiated our facility at the time of the acquisition. We have a 15 million RCF, which is fully available for us. And at the same time, we renegotiated the terms so it's not a complete pay down on a year-by-year basis. Just a little bit more detail around the revenues and the P&L. So our legal services business, as I said, is up 9.7% to 12.8 million. Included in there is 1 million of gains on litigation assets. We didn't have anything last year. If you can reflect back, we do a number of bits of contingent work within the business. We see the sell down of those litigation assets within the legal services is very much as part of ongoing business. I'll talk a little bit more about realization in a later slide, but fundamentally our realization and utilization against our peer groups are significantly in front. We've driven them and we focus on them, and we've got significant results coming through from MC as well. Our targets are slightly different, but fundamentally I'll explain a little bit in the future. Effectively, we're driving at the same thing. Our average revenue per fee earner is 375k on a consolidated basis. It was 497 last year. Last year, we benefited from a significant one-off deal of around £2 million in the first half of the year. So that's distorting this number. What you will see is that our revenue per fee earner is significantly in the top, I would say, 10 of all law firms, as our total revenue will be within the top 100. We've got gains on litigation assets in Lionfish of 0.5. Our personnel costs are increasing as the business is growing. And just to highlight on that, we now have a total staff at the end of June of 239. And a key point that Nikki highlighted was the fee earners within that. Memory Crystal, the acquisition, has added 139 staff. Finally, our EBITDA of 5.2 million is 28.1% of our revenues. We've often said we're driving to mid 30%, and Nikki wants more around our EBITDA margins, but where we're positioned at the half year puts us in a great place in order to deliver on that EBITDA target that we're trying to achieve. Just onto the balance sheet, I'll pick out some little bits in the balance sheet just to reflect the acquired business and the growth around trade debtors and other receivables. So our trade debtors are 7.5 million. 4.3 million of that is Memory Crystal, so you see the growth through the acquisition. Our WIP or contract assets are 6.8 million. 3.9 million of that is Memory Crystal. You notice we always focus and we always talk about in the legal services business quite obsessively actually on our lockup. Our lockup for the half year was 102 days, and that's consolidated across the two businesses. That's in front of where we were last year on 140 days. And again, we got to focus on debtor days. If we're invoicing, we want to collect the cash as quickly as possible, with 46 days in comparison to 49. The trade and other payables includes 5.7 million of deferred consideration. The majority of that is tied into the MC deal, Memory Crystal deal. We talked a little bit about the net debt. I want to highlight just finally the net litigation assets. So as I've highlighted, we're carrying them at 7.7 million on a fair value in our balance sheet. The cash investment year to date has been 9 million. That's spread across 5.8 million in RB cases and 3.2 in Lionfish. And what you see the difference is the write-off of the cost of that investment into our P&L. So as you see that our carrying value of our litigation assets are below our cost of investment, and we are trying to drive towards having it as close to cash as possible, because we think it's the fairest way to represent this under the accounting standards. A quick walk through the cash flow statement. So just to highlight, we're generating cash profits, 2 million in the first half year, a cash conversion of 56%. Our target we've always highlighted is 75%, and we're driving towards that. Within the cash flow statement, you'll see that we've invested in the acquisition of Memory Crystal with 12 million. We've paid a dividend during the year of 2.7 million. And the key part of it is that we funded that with a 10 million acquisition or term loan from HSBC in order to fund the acquisition. We do show it in a cash bridge, and people prefer either way. I'm a bit more numerate, so I've walked through on the under the normal statement, but this is just a different representation, but it gives the same answer. We'll go on just to finalise now and just focus a little bit on RGB Legal Services. As Nikki highlighted, this become legal entity by the 1st of September with one SRA license, but we are still trading under two brands. Rosenblatt, where we will trade under the contentious side of our business, the dispute resolution, and Memory Crystal, the non-contentious. And you'll see through the acquisition, this plays the strengths of the two businesses as well. If we've not bombarded you enough with numbers, that we can just add a few more to drive into the metrics around the business. So this shows the position of the businesses at the end of June. So you will see that RB is a contentious business, 63%. And then you'll see within MC that it has a broader spread across corporate and real estate. So when we put the two businesses together, it's probably the most perfect merger that we can, or acquisition that we can have, where we've got very little crossover. We've got a strong dispute resolution in RB, and it's being added to and emphasized and reinforced by the corporate and dispute side of Memory Crystal. Although they do still, or they did have a strong dispute resolution in Memory Crystal, which is we can join within the RBL side of the business. Some metrics, so the number of fee earners, 90 in Memory Crystal. It's come down a little bit since the acquisition, and Nikki will talk to that in a little bit more detail. Our revenue per fee earner has gone up in Memory Crystal to 360k. Utilization and realization, they're still achieving very good rates. The lockup of 105 days. RB, the same metrics. Look, we've got 49 fee earners. Our revenue per fee earner has always been high in that business, 395. I think it was 425 at the year end. We've always had strong utilization and strong realization driving those numbers, and a strong focus on lockup of 97 days. Just to highlight some points, and there's a bit of myths actually. So we work on 1,500 hours, and then we target a 75% utilization and an 85 realization. Memory Crystal works on 1,300 hours. So by the time we put the utilization against our target hours, effectively we're working on the same hour target. So it's just to dispel a little bit noise around our 1,500 target. We just talk about it in a different way. That's the only difference that we're driving at. This is our comparison to the peer group and the rest of the industry, and we keep driving at that. So our revenue per fee earner has always been higher than the average. We're always within, I would say, the top 10 of revenue per fee earners in law firms within the legal sector in the UK, and this is still continuing. There is a slight drop off towards the end of the last year, but that's as we've diversified the revenue proposition within the legal services business. Our utilization is always in front of our peer groups, 86%, and I think best in class within the listed peer group. And our lockup again of 102 days, significantly in front of the average of our peer groups as well. But key metrics that we drive at, and then ultimately as well, is around EBITDA. We've got a very cash focus to the business, a very profit driven side to the business. Our EBITDA margins are 35.6% and always significantly in front of our peer group year after year. Just to show a little bit about the legal services and now how that has moved the consolidated business. So our dispute resolution has moved back from 61% of the business to 53, 54%. And then we've strengthened in corporate and real estate. This is a natural hedge across the business. Obviously, we've grown in scale, and you'll see there a reflection of that in potentially our revenue per fee earner and our consolidated EBITDA margin around the legal services business. But there is diversification of fee earners. I think a lot of the summary, as we've already reiterated, we completed the acquisition in May of 2021. We've had a single legal entity and one SRA license from the 1st of September, which enables us to access the integration and consolidation benefits from the integration. We trade under the two brands. We have 212 people in the business, 139 fee earners, so diversifying the fee earners across the group. We believe we're driving at a leading mid-tier legal services business with some strong metrics. I think the forecast is for the joint business to deliver 36 million and 10 million of EBITDA by the end of the year. So we've got a strong business pipeline even within these uncertain terms, we've traded well, and we continue to trade well. And I think maybe Nikki, you can pick up a little bit around the integration and what's been happening on the integration.
Yeah, so just to give some colour about where we're at in terms of the phase one of the integration, which was really the support service department. We have restructured them, and 12 people have left the business as part of that restructure and transfer into one legal entity. We've had 11 fee earners across the businesses leave. Some of them prior to the acquisition, just prior to the acquisition, or the decision, I should say, was made prior to the acquisition, but have left subsequently to the acquisition. 2 of them were performance managed out. 5 of them are lifestyle choices, and 4 are through career changes. We have made a commitment to the business that we would not restructure the front end of the business fundamentally through redundancy programs, because ultimately we're trying to expand our fee earner base, not contract it. What we are doing though is looking during phase 2 at whether the right people are in the right jobs and are performing at a level that we feel is appropriate for the work that department needs to deliver. And to that end, you generally find that people that are not suited to work in our environment that we are looking at are already feeling that they're not in the right jobs anymore. So there tends to be a natural attrition at this point, and that is what we are certainly seeing. We have made the decision as part of the first phase of the integration that we want to merge into one office, physical office. The reason for that is that they have enough capacity within their existing floor plans in the Fleet Street offices that Memory Crystal occupy for us to bring in the teams and merge them, which we think will facilitate a far smoother and far more cost-effective phase 2 to our integration. It also enables us to effectively close our Holborn offices to external clients and external meetings, and that means that we can effect further cost savings than we envisaged in the first draft of the integration plan. And that will happen and be finalised between mid to the end of October. So that gives a little bit of a flavour around what is happening on the integration. I want to just move now to Convex and cover the rest of the group. Obviously, just a little bit about Convex for those who are new to joining our presentations. Just a reminder, it's a specialist provider of sell-side only M&A advice. So they do not act on retainer, and they do not act for clients that are looking to buy. They only act for vendors. And to that end, they create their pipeline and they build it from scratch. And the average fee in this market is generally around £200,000 at this level, certainly in a provincial corporate finance house, as Convex is based in Manchester. And Convex has moved that to £750,000 for their fee. So it shows that, very similar to other businesses in the group, they're entrepreneurial and they have a similar way of working to ourselves. If we look at their pipeline now, those of you that were with us in 2019-20 will remember that their pipeline was dominated by travel and leisure, and they have had to rebuild that pipeline during the pandemic, and they now have an exceptional 36 active deals which have signed engagement letters with the group, of which 9 have been completed and a further 9 are at various stages of process. You'll see from the pipeline by sector that we're now looking across technology, software, retail, even professional services, and one of the completed deals was a deal that we introduced to them, which was a professional services business that has been sold into, I think it was Begbie's, if I remember rightly. Moving on to litigation finance, and just a reminder of how this looks for us as a group. We have 2 types of litigation investment. Since the float and the raising of our initial money, we have been able to fund our own cases on our own balance sheet, and we have done this through Rosenblatt, which has 5 active cases ongoing. We have further acquired CFAs and DBAs as part of our acquisition of Memory Crystal, and those are only just coming across now in the second half. So we will talk more about them at the year-end results. And then in May 2020, we launched Lionfish, which is to invest in litigation and fund clients who have litigation being run by other law firms. So we do not and cannot fund Rosenblatt or Memory Crystal's cases. And for those of you that want to understand why, and I think there is a question on the Q&A already about this, The reason is that if you think it through logically, if you have a client at Rosenblatt who needs to be funded, who can't afford to run the case, needs to raise money to pay our legal fees and to pay counsel, if we then introduce them to Lionfish and Lionfish wanted to fund them, we effectively have a conflict of interest because we would be advising our client to accept that funding because it's in our best interest because it's our other sister company. And that conflict of interest is a breach of Champity, and we are not allowed to do that as a regulated legal entity. And therefore, the only way to attack the rest of the litigation funding market to benefit from all those other investment opportunities was to do it through Lionfish. So if we look at where we sit today, RBGLS Litigation Investments in future, this slide, it's the same one you saw currently at April, but in future it will contain a combination of the Memory Crystal ABAs and Rosenblatt's ABAs. In terms of these existing cases, there has been no change since April. Predominantly, they are ongoing. In the case of Neptune, there are many questions on the Q&A on Neptune, so I'm going to deal with that on the Q&A rather than here. But there is fundamentally no answer yet from the Supreme Court, the application that we have made. Shango has had various hearings, but none of that has moved us forward to, also on progress to the trial, which is obviously next year, the first main trial, and Mercury similarly remains in process. If we look at Lionfish's investments, these are now at 10 as of the 30th of June, a total capital committed of 8, but only 3.2 million deployed. Two aspects to draw out on this slide. One is you can see immediately the attrition rate, 393 inquiries, only 10 decisions. And that's very consistent with what you'd expect to see in the sector for a funder. Of the 8 million commitment, the deployment being only 3.2, we don't necessarily end up deploying the full 8 because cases settle or other things can happen during the funding duration. And yet we do charge on the capital committed. So we still make our return as if we had invested 8 million. And we currently have, I think we've said it elsewhere, a large amount of money that is not reflected, certainly Robert's covered it, is not reflected in our results and is not marked up anywhere in our numbers. So we will only report those when they are received in cash. If I look to the outlook now for 2021 and the year end, I'm comfortable with the forecasts in the market. I think we're going to have a strong year. I think what always is difficult for us is Convex, because even though they have a multitude of transactions and the market is always looking for us to be confident around where those will land, Convex does not have the power to decide whether it comes in December or January. And to that end, it's quite binary. And some of those deals that are in the pipeline of the 9 that we're in process on will fall into Q1 2022. And that means we're unlikely to see any change that will bring through to our numbers until much closer to the year end, when we have much more certainty around where that will land. In terms of the rest of the business, we're very comfortable about where it sits today. The integration is making good progress. On our M&A strategy, I have been asked whether we would look at doing a similar size deal in the next 6 months. And I think it was fairly confident we could say that we wouldn't do that because, as you know from my earlier presentations, I feel very strongly that we need to gain the benefits from the existing integration rather than rush through and do other acquisitions that we would need to concentrate on. We need to extract the benefits from this acquisition properly, and therefore any M&A in the next 6 months is likely to be of a smaller size or would be a bolt-on to our existing businesses where there is not the same heavy lifting required of front-end integration, not litigation, integration. And that ends my presentation for today. So I would like to turn to Mark to compare the questions that I know.
That's great. Thanks ever so much indeed to both Nicola and to Robert. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review the questions submitted already during the meeting itself, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard, and we'll send you an email when that's ready for your review. I'd also like to remind you that your feedback is important to the company, and immediately after this presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Right, cracking on, Nicola. Obviously, investors had the ability to pre-submit questions ahead of today's event, and I propose to read those out to you now, if I may. The first question is as follows: is there a bank charge affecting Ian Rosenblatt's shareholding?
Yeah, we announced, I think, 2 years ago, if not even longer, actually, that he had a share-backed loan, and that loan continues at the moment. There's been no change in the status of that.
Thank you. Is RBL appealing to Bilter verdict from the Court of Appeals to the Supreme Court?
So we have submitted an application to the Supreme Court to overturn the decision of the appeal court on behalf of our client. Can I just remind everyone, and many of the questions around Bilter, which is Project Neptune, for those of you that are not familiar with it, Project Neptune, that we are acting on behalf of our client. We do not own this case, and therefore every decision we make is for them. And yes, we are appealing to the Supreme Court, and no, we do not yet have the answer.
That's great, thank you. Maybe one for you, Robert, if I may. How much was carried on the balance sheet in respect to the Bilter case at 30th of June 21?
Nothing. So just to reiterate, we don't carry any contingent WIP in our balance sheet, and we don't recognise any contingent revenues through our P&L. So that will be nothing.
And just to add to that, in case again there's any confusion, this is a CFA, so we do not have any cash invested in this case. It is not a DBA.
I think you've just touched on this, but just for clarity, who is responsible for the costs of the Bilter appeals case?
The client.
Thank you. Turning on to, we got 3 or 4 more questions. The next one reads as follows: assuming there is a retrial in Bilter, who would pay for the defendant's costs if the verdict is different in the retrial? And would this also include the defendant's costs from the first trial?
So the client is responsible for all of this, and the client also has AT insurance in place to cover them should there be an adverse costs order from the first trial. And we've had confirmation from the insurer that our client is covered. But this is not a liability of Rosenblatt's or this group's.
Thank you. And continuing the theme, but just for clarity, is there if there is a retrial in Bilter, what would RBL's estimated third-party costs be?
You know the answer, it's coming. It's 0. It's 0.
Okay. You know, as I say, these questions that you wanted addressed, they're all there for you. And the final one, which I'm merging 2 questions that we received, relates to Barry Roche. Why did Barry Roche resign? What happened between the trading update on the 16th, between the 16th of July and the 31st of August that triggered a resignation? Was it connected in any way to the acquisition of Memory Crystal?
No. So for those of you that remember from our CMD or had met and from earlier presentations I've made, we had recruited Barry in to be the one to operate the legal services division. After a year, I mean, we had a very successful year last year, and Barry did a really good job, but we felt that we'd come to a point where the job was going to change quite materially. And obviously, Barry had arrived to run a business that was already restructured and already running to the metrics that we required. And Barry felt that he wasn't the right person to run the integration of Memory Crystal and Rosenblatt, and we agreed with him. So it was a mutual decision to go. There was no specific event. I have read the threads and the blogs, and no, I don't run a cozy coffee club. But there was no falling out, and Barry and I remain friends and did see each other. But what is difficult about this sort of business, and I want to take this opportunity to highlight this, is that it's not a sector that attracts entrepreneurial type people like myself generally, and finding the right person to put into the right jobs is not always easy to do. Now, I've been extremely lucky so far and to date in both my CFO, in Mike Driver when we acquired Convex, in Tetsu Shikawa, who I headhunted in the litigation funding industry. All of those decisions were right and have proven to be so. And sometimes you make a decision, and Barry and I both felt that he was not right for us and it wasn't right for our future. And we mutually agreed to part company. So his resignation was planned and timed by us to fit in with the business transfer and to enable me actually to have my summer with my children and take over from him on the 1st September, for which I'm eternally grateful. And it is our intention to replace him with a COO stroke MD for the legal services business, but it gives me the opportunity, and for those of you who know me a little better, I like tinkering in the shop. It gives me the opportunity to have 6 months to get my nose under the bonnet and really drive out the metrics for this integration, and to be able to hand it in better shape to my successor in that department. And I will step back to be chairman of that business, I hope, in Q1 next year.
Nicola and Robert, thank you very much indeed. That does address all the pre-submitted questions. So firstly, thank you to all the investors that have pre-submitted questions, and also to those that, of course, have submitted questions during the live event. Perhaps now would be a good time, Nicola, if I may, to hand back to you and Robert. If I could ask you to read out the question and give a response where it's appropriate to do so, and then I'll pick up from you at the end.
Yeah, certainly. Some of these questions I want to share with Robert, because he'll have other, we now have a much bigger group, and he sees some parts of the group more than I do. And obviously I too am not always in the office. So the first question is whether our teams are returning to work in the office, and will we be encouraging this in the interests of both the individual and the business? And that is certainly the case. I think we all had a view when we went into lockdown that remote working was very successful, and we could see the benefits of that, both commercially and obviously for people's lifestyle balance and choice. But ultimately, only time will tell the impact that has had on businesses, because specifically in our legal services division, we train lawyers. We need to have teams running big cases. So we are very keen to have people start to return to the office and interact together. And the legal services side has basically adopted a 2-2-1 model, where 2 days are in the office, 2 days are remote, and 1 is decided by the heads of department. Convex is different. Convex wanted to be back in the office really early days because they want to engage with clients. But actually, as it turns out, quite a few clients have got used to Zoom. And that's part of the reason why their pipeline is so big, that they've been able to engage with clients over Zoom, and that's cut down all their traveling time, which means they've got much more time to meet with people. So that's been great. And Lionfish have really found that there's been no difference in their model, being remote or being in the office. Robert, do you have anything you want to add?
No, I think just to say that we see the benefits of both, Nikki. If you're doing difficult things, it's good to do it face to face. But obviously, if you're doing other things, then to have a focused time at home delivers into the business as well. So at the moment, like all businesses, we're just feeding our way back into big whatever business or as normal will be.
Yes, right, whatever that will look like. The next question is how can I respectfully ask, Mishcon and Gately have just announced litigation funds joining LCM and Burford. Can you see RBG creating such a fund to be run by the Chief Tetsu Shikawa in charge of Lionfish? I think I just need to clarify what this means and what actually the others are doing. Gately has not announced that it's doing a litigation fund. Gately has put in its results that it is in discussions to set up a litigation funding facility of around 20 million to underwrite their own balance sheet. So effectively doing what RBL did at Float, getting more money in behind them so they can invest in their own CFAs and DBAs. And what Mishcons have announced this week, although it again isn't very clear, there's not much detail around it, is they're going to tie up with Harbour to have a joint venture special purpose vehicle that would be a litigation funder that can fund their own client cases. Now, as I've explained earlier, that is not possible. You cannot fund your own client cases. You have a conflict of interest. And if you read the piece that will be in the FT tomorrow, you'll see me quoted confirming the same. And there is some confusion on that. I suspect that what Mishcons are doing is just announcing that they intend to piggyback off the litigation funding opportunity as part of their IPO strategy in the same way that we have. And I don't think the detail has probably been thought through yet. That's certainly my reading of their announcement. And we effectively don't have a fund we run off balance sheet, but we certainly are now looking as we get bigger, and obviously there is always going to be a rationalization of resources. In other words, where do you put your money? Where are you getting the best bang for your buck? There is no question that looking at other funding sources for Lionfish is on the table at the moment. alongside other opportunities as part of our M&A and corporate strategy discussions. This is one for Robert. Can you elaborate on the intangibles on the balance sheet, please?
Yes, I think it's in slide 10 actually, where we do draw it out. I just moved over it. So you'll see that's not even the wrong one. Yeah, so you'll see the intangibles in.
Sorry, I'm messing around. We're both doing it.
Right. You'll see the intangibles, 56 million. Within that 56 million, 51 million of it is goodwill. The remainder is client contracts and brand. And then the breakdown between the three businesses or the three acquisitions. People often forget that we acquired RBL at the start of the journey. Nikki, it was the first acquisition. So there's 17 million of goodwill for RBL or RB, 15 million for Convex, and 18.8 million for Memory Crystal. And obviously, year on year, we have to fair value these and go through the audit process, and all our investments and the goodwill that we're carrying at the moment have been substantiated through the audit process.
And again, for you, Robert, can you see Memory Crystal achieving monthly revenue to 31st December 21, at least in line with their unaudited results for 2020?
Well, part of their unaudited results, they had some one-off revenue and profit. So I would say probably 3 million of that results was due to their CFAs coming to fruition. We see them trading as the underlying business within that. And what we're seeing at the moment is it's trading quite strongly with that. So no, it won't be their full unaudited results, but if you strip out the one-off element, then yes, we see it as being possible to trade on that basis.
Thank you, Robert. In terms of the integration of the law firms, are the fee earners being reallocated from one brand to another based on their specialisms, i.e. RB Corporate becoming MC Corporate? And yes, the answer to that is yes, broadly. That is happening in phase 2 over September, October. And then you go on to ask James, if so, given the likely egos involved with senior lawyers, how is their individual rebranding being accepted culturally, both by staff and clients? In terms of, there are big egos in some aspects of the business, but that really doesn't dominate here. So we, in terms of, there is a bit of a natural evolution of brand and culture here, because Ian Rosenblatt is obviously the founder of Rosenblatt, is very identified with litigation and crisis management. And some of the long-serving partners who are on the management board of Memory Crystal are corporate partners who are, again, very well known under the MC banner in the city and within business in London. So there has been a natural split under those two areas, and both Nick Davis is the senior partner of the Memory Crystal brand, and alongside Leslie Gregory as chair of that brand, who are the established names, and Ian and Tanya, who are the original equity partners in Rosenblatt, are very much associated with the contentious side of the business. So that's working. In terms of our clients, obviously partners are working with their clients. We currently have not had any pushback, but I stress we are in the early days of the actual changeover to brand. So the actual RB corporate team has not yet physically moved under the MC, and that will happen during the next phase of the integration. Barry asks, given that you speak about being investor friendly and transparent, do you think it'd be better if your broker research was available? I think there's a technical answer to this, which is probably beyond me, and maybe Robert knows, but I think that they're not allowed to publish it. I think that's the answer. Do you know, Robert?
No, I don't. But obviously, it's not our research.
Not our decision anyway. But one of the things we are looking at, and we've said this before, and I just haven't got there yet, but I hopefully will by the year end, is whether we would do some paid research, which would be available. And to that end, we will hopefully have something available, as I say, later this year. And then Richard asks, sorry, I was late to the meeting, so this may have already been mentioned, but have you forecasted growth for the next 6 months? So Robert, over to you.
Yeah, we don't forecast anything, but there are numbers in the marketplace by our advisors. So yes, there is growth. If you bear in mind that we did 25.6 million and 6.7 million of EBITDA last year. The projections for this year in Singer's notes is for 45.5 million revenue and 11.8 million EBITDA. So I think in my term, that's quite significant growth, even adding the acquisition as well.
That's great. It may be an opportune time for me to come in, Nicola, Robert. I see that you've addressed every single question that's been submitted during the meeting itself as well. So thank you very much indeed for doing so. I know investor feedback is important to you. We'll shortly redirect investors to provide you with their thoughts and expectations. But before doing so, Nicola, perhaps I could ask you for a few closing comments.
Yes, I just wanted to again remind everyone how important your questions are to us and how important your feedback is. We do, as you probably noticed from my comments, follow the bulletin boards and the blogs, but we do encourage you to contact us if you have any questions, and if you want to follow up, you can always email us at the company, and we will always respond to everybody's questions. And many thanks for taking time out to listen to our presentation today.
Nicola, Robert, thank you once again for updating investors this morning. Please could I ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. It will only take a few moments to complete, but I'm sure will be greatly valued by the management team. On behalf of RBG Holdings, we'd like to thank you for attending today's presentation. That now concludes the session, and good afternoon, or actually it's still good morning, isn't it, to you all.